Welcome, crypto fam, to No One Daily Bitcoin Pod. Bitcoin pumping back in the green, up 4,000 on the day. And Peter Schiff has the balls to tweet, gold is the apex predator that will eat Bitcoin. And he tags Michael Saylor. Also breaking news, Russia is using Bitcoin, Ether, and stablecoins for their oil trade with China and India to bypass sanctions. Also, billionaire Tim Draper isn't selling, says Bitcoin heading to 250,000 this year. He says all fiat currencies will fall against BTC. We'll also be discussing calls for stricter rules on political meme coins after the $4 billion Libra collapse with Javier Milei. We'll also be discussing Democrat lawmaker urges the Treasury to seize Trump's Bitcoin reserve plans, as well as U.S. Representative Byron Donald to introduce a bill codifying Trump's Bitcoin reserve. We'll also be discussing the Bitcoin to gold ratio breaks 12-year support as gold hits a new record all-time high of $3,000. We'll also be discussing the Bitcoin market cap primed to surge 400 to 500x from here, according to the Strike CEO, Jack Mallers. We'll also be taking a look at the overall crypto market. All this plus so much more in today's show. If you're new to the channel, important to smash the likes, go ahead, subscribe, then ring the bell. Turn on all notifications to receive daily premium crypto newsletters every single day, 7 days a week, just like this. Today is pod episode 1933. I'm your host, JV. It's March 14th, 2025. Bitcoin back in the green, up over 4,000 on the day, about to recapture 85,000. And checking out our market watch, we'll pull up Coin 360 here, should be able to see on your screen. The bitty, pretty low bitty, up 5% on the day. Ether up 4%, still trading sub 2,000. XRP up 4%, trading at $2.36. Tron in the red. And the majority of the alts are actually pumping today. It's been quite a while since we've seen this. And checking out coinmarketcap.com. Today's crypto market cap, 2.76 trillion. The bitty market cap, 1.678 trillion. We have roughly 85 billion worth of volume for the past 24 hours. And the Bitcoin dominance currently is at 61% even, with the Ether dominance at 8.5%. Checking out top 100 crypto gainers past 24 hours. Ironic enough, Trump coin leading the charge, up 17% on the day, but still trading at $12.25. The all-time high was like between $70 and $75, I believe. The market cap is currently 2.45 billion. The max supply of the Trump coin, again, can't make this shit up, 999.99 million tokens. You can see the circulating supply. I guess that's what's currently circulating there. The all-time high is $75, so we're quite the distance from there. But anyways, I digress. Other top gainers are Hype and Whiff, Dog Whiff Hat. Let me know which alts, if any, you're bullish on for the bull. Holla at your boy. And checking out the crypto bubbles, we get a visual perspective on the day. Majority of the market in the green. I'd say safe to say 95% green, 5% in the red. Zooming out on the monthly, y'all must have forgot. Still Rec City overall, barely anything in the green. 20, 30, 40% plus losses across the board. And checking out the crypto greed and fear index. Today, we're back in fear, 27. Extreme fear is 2 points down, which would be a 25. Yesterday was a 45, last week at 34, and last month a 46 in fear. And checking out the time chain calendar. We're currently on block 887,775. We have 162,225 blocks till the next halving of 2028. And you currently exchange one fiat monopoly dollar for 1,180 sats. So pick up the sats, put down the gats, pick up some Bitcoin caps from my man, Sergio. And if you don't know, now you know. So let's dive right in. Today's astrology for the broskies, aka technical analysis. And today we're just gonna actually pull up the charts. You should be able to see cleanly here on your screen. This is a 10-minute chart. You can see we do have obviously an ascension overall. We do have a bear target though, sitting at 73.8, but this is a 10-minute chart. We typically start at the 1 hour. We'll work our way backwards here. We do have a rising wedge formation. We do have a couple of bull targets. The Super Bull is 109.7, which would take us back to price discovery, as the current all-time high is 109.3, which was achieved roughly 2 months ago, January 20th, on Trump inauguration day. And we also have the green bull target, an inverted head and shoulders pattern, sitting at 92 474, and the bear scenario on the 1 hour is 73,851. Let me know where you feel will likely climb next. And zoom it out from the hourly, we take a look at a 4-hour chart. Also a rising wedge formation, even though we have a falling wedge prior. So we do have two green targets here as well. A double bottom top at 113.7, again, would take us to price discovery. And we also have the falling wedge at 109.7, which would also take us to price discovery. If we did bottom out here in the 4-hour, the target is 73,909, practically an 11,000 drop from the current price action, as we're currently above 84.5 at the time of the live stream. And checking out the daily chart, you can also see a rising wedge formation followed by a falling wedge. We do have a couple of bull targets, one at 116,436, the falling wedge, and then we have the green target double bottom at 113,702, and then we have a couple of bear targets. A double top bear target of 68,699, and then a super bear target sitting all the way down at $49,000. And zooming out from the daily, we take a look at the weekly. In a couple of days, we'll get a new weekly close. As you can see, last week was a very bearish close, and the prior week before was a bearish close. So I'm really hoping we get a strong bullish close for this Sunday, and we're shaping up to be that way thus far, as long as the markets don't crash. And we still have the sexy cup and handle target sitting at 124,000. I know the Q1 is almost over. We have literally 2 weeks left to go for Q1, but let me know when you think we'll likely hit that 124 target. I think once we can reclaim price discovery, I think that's the next logical step up, somewhere between 120 and 130,000. And zooming out from the weekly, we take a look at the monthly, and it's going up forever, Laura. And as you can see, February was a very bearish month, unfortunately. January was green. December was red. November was Godzilla style, almost a 30,000 gain in fiat. And we'll see how we do for the month of March. We're only halfway through, so time's to tell. And with that being shared, I also want to pull up some of the breaking stories here. This is what I was laughing at earlier. Peter Schiff had the balls to tweet, "Gold is the apex predator that will eat Bitcoin," and he also tagged Michael Saylor. I don't think Saylor responded yet. I don't even encourage Saylor to have to respond to this clown, but I responded for him with this meme. "Hey, Schiff, how are your trades going?" "Oh, gold is up 36% since 2009. "Well, Bitcoin's up 32,000%. Laser eyes, take that." Hey, like that. It's one of my favorite memes. Anytime you see any sort of shenanigans from Peter, which is practically every post he does, remind him. Put him in his place here with the memes. And also, breaking news, Russia is using the Biddy, Ethereum, and stablecoins for their oil trade with China and India to bypass sanctions. And we also have the billionaire venture capitalist Tim Draper says he isn't selling, says Bitcoin's headed to 250,000 this year, 250 G's, baby. He actually said all fiat currencies will fall against BTC. And I'm also going to add gold to the mix. Gold will also fall because Bitcoin is the one and only apex predator. What do you got to say to that, Schiffmeister? Next story of the day. Now we did the TA. Let's discuss these meme coins. Headline reads, calls for stricter rules on political meme coins after the $4 billion Libra collapse. And I just must say, not a good look, Javier Milei. Not a good look. You did make a post backing, supporting, hence promoting this bullshit, and people got rugged literally over $4 billion on the project. So let's break her down, shall we? Industry voices warn that the politically endorsed cryptos must adopt stronger investor protections and liquidity safeguards to prevent another major market collapse. Investor sentiment remains shaken after the Libra token, which was endorsed by Javier Milei, the president of Argentina, which suffered a $4 billion market cap wipeout due to the insider cash outs, the snipers, the insider trading. It was a disaster, to be quite honest. And according to the blockchain analytics firm DWF Labs, at least 8 insider wallets withdrew $100 million in liquidity, triggering the massive collapse. This is the problem with meme coin launches. It doesn't matter if the president is involved, and that goes for Trump. It doesn't matter if the first lady is involved, and that goes for Melania. It doesn't matter if it's Milei. It doesn't matter if it's the Hawk Tua. It doesn't matter. It's just it's a recipe for disaster. Retail is always the biggest losers, and the only fucking winners, I dare say, are the insiders, the snipers, and the team involved with the launch. But I digress. To avoid a similar meltdown, tokens with presidential endorsements will need more robust safety and economic mechanisms such as liquidity locking or making the tokens. And how about you just don't launch the fucking meme coin as a president of any country in the world, knowing it's a scam? How about that? We don't need liquidity locking. Just don't launch. Just don't promote the meme coin. It's like we're dealing with retards. The report stated that tokens from high-profile leaders would also need launch restrictions to limit participation from crypto sniping bots. Here's what I understand from the insider teams and the snipers involved with the manipulations that have actually testified. CoffeeZilla interviewed the guy Hayden who was behind the Melania launch. This Libra launch. And they straight up said, if you're retail, do not get involved. You're not supposed to win. Retail's supposed to get wrecked. Everyone loses unless you're the insider, the sniper, or have some form of insider position. So why even get involved? Why even allow it? Is my questioning. But limiting bot and whale activity, because it's impossible to limit the snipers and all this shit they're talking about. It's impossible according to the own dev teams that are responsible for launching the scam tokens to begin with. So what are we talking about? But quoting them here, projects must strive to deliver as fair a launch as possible. Well, it's impossible. So that all participants have an equal opportunity. Impossible. To secure an allocation and aren't disadvantaged. Impossible. By a handful of well-funded or well-informed players. Impossible. Claiming the lion's shares of the supply. Impossible. That's just why even get involved. The Libra scandal resulted in 74,000 plus traders losing a cumulative 286 million worth of capital, according to DWF's lab report. The token's quick meltdown further illustrated the need for liquidity locking. I don't think that's going to solve the issue, which ensures there is sufficient liquidity for users to buy and sell without high slippage. This is particularly valuable during the launch phase of a token when there is high volatility, ensuring there is sufficient liquidity to satisfy large trades without the major price impact. There's always going to be snipers. There's always going to be insiders. It's impossible to prevent. This is coming directly from the dev team that launches these fucking meme coins to begin with. So is more transparency really going to help solve these issues? Probably not, in my humble opinion. Quoting them here. These include the pre-launch wallet transparency launchpads, conducting better due diligence on the projects. There's always a degree of risk when launching any token. Thanks, Captain Obvious. Nevertheless, by carefully scrutinizing the projects they partner with and taking the full advantage of the transparency that is one of the blockchain's core features, launchpads can empower users to make more informed decisions. Tell it to the Hawk Tuah girl. But there you have it, yo. Obviously, I'm not a fan of these meme coins because I feel it's like an attack on retail, and the retail traders honestly are either retarded or don't know any better and should know better. But either way, stupidity plays a major role here. Insider trading plays a major role. Sniping plays a major role. And again, according to the devs that launched these shit coins, there's no way to stop it. So if there's no way to stop it, why even get involved? You understand? It's a lose-lose scenario. Now we can dive into our next story with the Trumpster. Headline reads, Democrat lawmaker urges Treasury to seize Trump's Bitcoin reserve plans. Oh no. A Democrat lawmaker called on the U.S. Treasury to seize all attempts to create the strategic crypto reserve in the United States, citing conflicts of interest with Trump and arguing that a stockpile would not benefit the American people. Now, when it comes to the altcoin stockpile, maybe they have a point, but obviously the Bitcoin strategic reserve is what's going to save America and the American people. House Representative Gerald Connolly of Michigan criticized the crypto reserve in a March 13th letter to the Treasury, stating it provides no discernible benefit to the American people and would instead significantly enrich the president and his donors. I tend to agree with that regarding the digital asset stockpile with Cardano. What else is going to be in there? Ethereum, in XRP. I think it's going to benefit the creators of the token and potentially the insiders, potentially Trump if he's receiving any form of kickbacks, but probably not the best look for the United States. Connolly, who didn't discern between strategic Bitcoin reserve and the digital asset stockpile, just lump it all into one thing, said Trump plans would constitute unsound fiscal policy because it chooses certain cryptos over others via social media. And that's why it should only be Bitcoin. Connolly said that the Trump admin's plan would also waste taxpayer dollars on what the Fed described as the dumbest idea ever. I dare say we've had a lot more stupider ideas in the past and plenty of things wasting taxpayer dollars. Just look at what Doge is finding. Now, no strategic need has arisen that would necessitate investment in the volatility and speculative crypto market. Connolly, the Reagan Democrat of the House Committee on Oversight and Government Reform, shared in the letter, it would constitute nothing more than a highly speculative taxpayer-backed hedge to provide Bitcoin speculators the assurance that when the crash comes, the state will deploy this fund to rescue it. And that was outlined in the letter. However, the White House also said the digital asset stockpile will only hold on to crypto already forfeited. And at the time, Bitcoin Reserve will only make acquisition through budget neutral strategies that won't actually impact taxpayers, meaning taxpayer dollars they don't need. They're just going to find ways to maybe, for example, sell your fucking gold and put it all into Bitcoin. Bada boom, bada Bitcoin. Connolly also said that Trump failed to consult with Congress over the Bitcoin Reserve plan, let alone obtain congressional authorization to create it. Well, my understanding is they have to approve it in order for it to, take effect. Connolly also alleged there were conflicts of interest between the Trump presidential duties of the Trump organization's ownership and the crypto platform World Liberty Financial, hence why Trump should have never put his name on it, and hence why Trump has been distancing himself from that project. I knew it was a bad idea from day one. Trump should have known better. And now, if you go to their website, you'll notice they completely changed all the languaging, trying to remove Trump from being a part of it. But anyways, also, he should have never launched Trump meme coin. We were making fun of Harvey Milei a little earlier for launching the Libra rug. Well, Trump, same situation. He's a president of the United States and should know better and should have never put his reputation on the line with the meme coin, which has crashed significantly from $75 top all the way down to $13 today. And that's after it just pumped 20%, just FYI. The Democrat referred to the Trump token as a money grab. I agree 100% with the Democrat there. That allowed Trump link entities to cash in on over $100 million worth of trading fees. Pretty accurate. This has been called Trump's most lucrative get-rich scheme yet, according to Connolly. Representative Maxine Waters, everyone's least favorite Democrat on the House of Financial Services, also criticized Trump's meme coin, referring to it as a rug. Why give them the ammunition to tarnish your reputation? For what logical sense? Did Trump really need to launch a meme coin? He's already a billionaire. His family is already well off. Did they really need to do that? So it gives your enemies ammunition at the end of the day. Connolly asked Besson to provide documents and communication related to the creation of the Bitcoin Reserve and a complete list of steps Trump's admin has taken to avoid conflict of interest. It does seem to be a conflict. I personally don't think the president of the United States should be launching meme coins. What are your thoughts, family? Connolly also asked for a list of companies in which the Treasury has crypto-related financial interests. Quoting them here, has the Presidential Working Group on Digital Asset Markets on which you serve, which has been tasked with developing a federal regulatory framework to govern the crypto reserve, reviewed financial disclosures by the admin's officials, including but not limited to Elon Musk rat. And the Strategic Bitcoin Reserve will initially use crypto forfeited in federal criminal or civil cases. Meanwhile, the digital asset stockpile will consist of cryptos other than Bitcoin, which will include XRP, Solana, Cardano, and Ether. And if you don't know, now you know. Continue with Trump. Codify strategic Bitcoin reserve. Headline reads, U.S. Rep. Byron Donalds to introduce the bill codifying Trump's Bitcoin Reserve. That's right. The new bill to be introduced in Congress aims to formalize Trump's executive order establishing the U.S. strategic Bitcoin Reserve, a move that can further integrate Bitcoin into the nation's financial strategy. Trump signed an executive order, as you know, literally 1 week ago. It was last Friday, March 7th, to use Bitcoin seized in government criminal cases to establish a national reserve. I have a crazy idea. Why doesn't the government return the stolen Bitcoin to those who lost it? My understanding is hackers steal from the honeypot, for example, the exchange, which it belongs to the retail, And then the government seizes it from the hacker and ultimately steals the Bitcoin. But the Bitcoin doesn't belong to the hacker, and it sure as hell doesn't belong to the government. It belongs to the retail who lost it. My understanding, why wouldn't they just return it? But I digress. Anyone else think that way? Like, fucking return the Bitcoin to those who lost it. But I digress. The legislation introduced by the U.S. Rep. Byron Donald seeks to ensure that the Bitcoin reserve becomes a permanent fixture, preventing future administrations from dismantling it through executive action. For years, Democrats waged war on crypto. Donald's a Florida Republican, said in a statement on Bloomberg. Now is the time for a congressional Republican to decisively end this war, referring to the war on crypto. If the bill is passed, it would ensure that the strategic Bitcoin reserve and the U.S. digital asset stockpile could not be eliminated via executive actions by future administrations. That seems to be important. Otherwise, they'll reverse everything being accomplished. The bill will require at least 60 votes in the Senate and a House majority to pass, with Republicans holding a Senate majority. And amid a generally more crypto-friendly environment, obviously, the bill actually has a chance of passing. And here you can see all the U.S. states with a Bitcoin reserve bill proposition currently in play, which is the majority of all the states in the United States. My geography is horrible. If I was to tell you which states don't have it, I couldn't even tell you because I don't recognize those states. But anyways, according to the Bitcoin law data, at least 23 U.S. states have introduced legislation supporting a Bitcoin reserve, reflecting growing state-level interest in integrating crypto into fiscal policy. Puerto Rico, where are you at? We need a strategic Bitcoin reserve already. The introduction of the Bitcoin reserve-related bill marks a pivotal moment for the wider crypto industry, not just the biddy. The legislation aims to cement the reserve as a permanent fixture, shielding it from reversal by the future admins. According to Andy Leon, the author of the Intergovernmental Blockchain Expert, the bill signals the U.S. government's intent to integrate the biddy into the financial framework, quoting him here. It builds on Trump's earlier executive action by providing a statutory backbone, potentially clarifying government's stance on digital assets. If passed, the bill could reduce uncertainty that has long plagued the crypto space, where agencies such as the SEC and the CFTC have often clashed over jurisdiction. A codified reserve might encourage a more cohesive regulatory approach, offering businesses and investors a clearer path forward. However, identifying the right funding mechanism and custody solutions for the biddy reserve is a challenging step for governmental entities that may delay the fund's creation. The bill may also provide more clarity on the government's future Bitcoin acquisition strategies. Although the current plan does not involve government Bitcoin purchases, the order does not rule them out. The order authorizes the U.S. Treasury and Commerce Secretary to develop budget-neutral strategies, that's the key word, to buy more Bitcoin for the reserve. And trust, there's plenty of budget-neutral strategies to capitalize on to stockpile that biddy. So you already know. But there you have it, yo. Anyways, let's continue with the news. Next story of the day. As you know, Peter Schiff was flexing on X earlier, calling gold the apex predator because gold just hit $3,000. But let's break this down. Bitcoin to gold ratio breaks 12-year support as gold price hits record 3,000. Here's Schiff flexing. And again, I had to share this meme to put him in his place, as Bitcoin's only up like 150 million%. It's all hilarious. But anyways, let's break it down. Bitcoin breached the rising support trend line against gold, which has been intact for over 12 years. And that's official as of today, as outlined here. Popular analyst North Star says this breakdown can spell the end of the Bitcoin 12-year bull run if it stays under the gold trend line for even a week, or worse, for a month. Is the Bitcoin bull market over? Let's take a closer look. The gold Bitcoin ratio breakdown occurred as spot gold rates hit a new record high of 3,000 per ounce today, after rising about 12% year to date. In contrast, Bitcoin, which is often called digital gold, has dropped by 11% thus far this year. But keep in mind, we're still in the first quarter. We have a long ways to go. The performance reflects the contrasting net flows into the U.S. spot ETFs, tracking Bitcoin and gold. For instance, on March 14th, today, the U.S.-based spot gold ETFs have collectively attracted $6.5 billion year to date. According to data from the resource World Gold Council, globally, the gold ETFs have seen $23 billion worth of the inflows. But on the other hand, US-based spot Bitcoin ETFs saw nearly $1.5 billion of outflows year to date, according to on-chain data Glassnode. The driving force behind the divergence lies in growing macroeconomic uncertainty and risk-off sentiment, exacerbated by President Trump's aggressive trade policies. New tariffs on China, Mexico, and Canada have heightened fears of a global economic slowdown, pushing investors towards traditional safe haven assets like gold. Meanwhile, central banks, including those of the US, China, and the UK, have accelerated their gold purchases, furthering boosting the gold prices. In contrast, Bitcoin is mirroring the broader risk-on market. As of today, its 52-week correlation coefficient with the NASDAQ Composite Index was 0.76. And has Bitcoin topped? I'm highly skeptical of that. I do think we bottomed at 77, and I do believe that you ain't seen nothing yet. I do think the next leg up, personally, will be incoming here. Obviously, the year preceding the halving, we always hit the cycle peak. We did already hit the cycle peak thus far, hitting 109.3, current price discovery, but I think we're just getting started. I believe this particular cycle is very reminiscent to the cycle of 2016, 2017, where Bitcoin in 2017 went up like 20x from 1,000 to 20,000, hitting the all-time high. Now for our feature story of the day, Bitcoin market cap is primed to surge to hundreds of trillions of dollars. Strike CEO Jack Mallers says we'll go up another 400 to 500x from here. So with the Bitcoin market cap roughly 1.5 trillion, he's ultimately projecting an over 500 trillion Bitcoin market cap. And if we were to 500x from here, from at least 100,000, that would take the Bitcoin price parabolic to 50 million, ballpark, obviously, per coin. So let's break this baby down. And shout out to the Strike CEO, Jack Mallers, and all my Bitcoin ballers. The CEO of the Bitcoin wallet and payment app Strike, Jackie Mallers, believes that the top digital asset market cap may shoot up by a factor of trillions of dollars. In fact, he said 400 to 500x on a recent interview with Pompliano. That's right. At the Investor Week in New York, Mahler said Bitcoin is a store value asset that can easily compete with other assets used to store value, such as art or real estate. Quoting Jack Mallers right here, Bitcoin's product market fit is in what people are calling store value. Humans own about 900 trillion worth of stuff right now. That's currency, real estate, art, collectibles, Pokemon cards, precious metals like gold, 900 trillion worth of stuff. It's estimated that about half of that is monetized, meaning they own the stuff, they own the house, they own the art, they own the precious metal, not to consume it, not to live in the house, not to look at the art, but because they are trying to store wealth. They are trying to preserve value. That means the market opportunity to store wealth, store value is about 4 to 500 trillion dollars. He predicts that the Bitcoin will capture a much larger portion of the store wealth market cap of the coming years, quoting him here. So when people say, can Bitcoin go higher than 100,000? The way I think about it is right now, Bitcoin's about 1.5 trillion market cap. It's going after 4 to 500 trillion opportunity. So I think Bitcoin still has a 400 to 500x left in it. I dig it. I think Bitcoin's going to grow to hundreds of trillions of dollars in market cap. So the $1 million question becomes, do you think the Bitcoin market cap will hit, let's just say, $100 trillion? And if it did, how would that reflect as far as fiat value? Would it be millions of dollars per coin? You let me know. And what if we were to hypothetically hit 400 or 500 trillion per market cap? There's also been interviews of the Giga Chad Michael Saylor saying Bitcoin will capture 200 to 300 trillion market cap, which ultimately the reasoning behind this is, again, the total addressable market, let's hypothetically say, is 900 trillion. I think after 900 trillion, it's going to be like 1 quadrillion, and the numbers just get ridiculous to even fathom. But let's just say it's 900 trillion for the sake of the argument. What if Bitcoin tapped into 30, 40%? All the wealth of the world went into Bitcoin. Well, there you'd have it. You'd have a 400, hypothetically speaking, trillion dollar market cap. And if we had a $400 trillion market cap, what do you think that would do to the Bitcoin price? We're talking tens of millions of dollars per coin. It's all speculation. But what are your thoughts? Let me know. Do you agree? Do you disagree? Do you think Jack Mallers is accurate here? Or do you think it's a pipe dream? Bitcoin will never have 100 trillion market cap. Let me know your honest thoughts and I'll read your comments out loud. Welcome everyone to the Q&A segment of the live stream.